doing some analysis in this video. So I do want to take a look at 3M. I kind of want to fill in their newest quarters to see how we're comparing to last year. I also want to look at Intel with you guys. This company I think is doing so well. It's on my buy list. I think we could get it for even cheaper. But I don't want to miss out on this because it's just such a good value I think right now. So going to have to do that. Also I gotta update this. I think I did this yesterday. Today's the 9th. I think I did this the 8th. It doesn't really matter. But so what do we do first? Let's do Intel because it's already here. So you guys mostly know Intel. They're in the semiconductor space. A lot of people, the big downside though, I guess I can like put it over here. Big downside is market share. They're in their competition with Nvidia, AMD. It's like Taiwan Semi too. Even there's a lot of competition in this space, and there's a lot of other good companies as well. But regardless of how good other companies are, we have to recognize that this company is still producing a lot of money. And what are they doing with that money? They're buying back shares. They have a dividend. So I still see a lot of value in Intel, despite what a lot of other people are saying about the other, like I'd say AMD. Yeah, AMD is a great company, but I'm just saying that at some point, any other company is going to have value. So why does this have value to me? I do think we already talked about this, but I'm going to be talking about it again in a little bit greater detail because I'm getting ready to buy. I think today I might just start my position. I mean, it's at 53.50 as of this morning. I would like to get it below 50, and if it does go to like 45, that's super spicy, but then that's going to drop like 10-12%. But even at today's value, it's still or even at today's price, it's still value. So we got a market cap of 217 billion. Revenue year over year pretty much increasing, 62, 70, 71, 77, basically 78, 72, you know. Not huge jumps, but regardless, about 10 billion. Wait, from 2017, why is this not showing? Operating income, 1823. That gives us a huge operating income of about 30% year over year. Like pretty consistent. I would like to see that increase a little bit, you know, but I mean, it's very consistent. I would, if I had to make a bet this year at the ending, they're going to be doing 30% anyway. Super good margins. Net income, we got margins about 30% too, anywhere from 25 to 30. 2017 was a little bit weak of a year, but look, the net income went from 9.6 to 21. Every year they're making about $21 billion. Even though it's not increasing a lot, like it's still valuable, like the amount of money they're making. And it's like how much money, yeah, so if they're making like 21 billion every year in the price, or sorry, I guess, yeah, the market cap is, let's say 21 billion, it's 217. You're paying 10 times earnings on the market cap, which is pretty cheap. Like, that's really cheap. If we can even go to like AMD really quick, just in comparison. I mean, the price to earnings 37, but like, let's just do that quick analysis too. Last year they made net income, and I know AMD is more of a growth company compared to Intel is more established, but I just want to look at this multiple, and then about 2.5, so 128, it is 128 divided by 2. I mean, do I really get to that math? That's like 50. So that is a pretty high multiple. Did I do that right? Net income compared to market cap, when Intel's is basically 10. Like, that's crazy. But yeah, that's a good way to value a company, how much they're earning relative to their market cap. I guess that's what, again, PE, price to earnings. Yeah, that literally is PE. It's just we don't include the shares because we take them out. Anyway, equity equity in the company, 69, 74, 77, 75 this year, increasing a lot. So assets going up, liabilities are either decreasing or increasing at a less rate. Ordinary shares 4.6 billion down to 4 billion in the last couple of years. They bought back 600 million shares. What is that percentage? So I'm just curious. Let's just do 46 minus 46 divided by 46. That's about 13% of the shares. Last couple of years, really good. Total debt, they are taking on a little bit more debt. They did take on 2019 to 20, and this year too. They did pay back a little bit. However, the debt to equity is only a 0.41, which is really low. Not really low, but low enough where I like it. The current ratio is strong. Yeah, again, low PE. Payout, their dividend right now is 2.58%. Payout ratio is about 31%, so not something to take lightly. Dividend's not amazing starting. However, look, they're buying back all the shares too. And they're not like a super leveraged company, and they have very high profit margins, so good for them. Pretty sustainable dividend. Free cash flow got 10, 14, 17, 21. They're already at 6, which actually isn't that much for this year. But take that average of the free cash flow. I just said multiply by 15. That gives us 234. So it's still, if on a 15 multiple to the free cash flow, it's still should be worth more. And I mean, honestly, they still are increasing the free cash flow at a pretty decent percentage rate. The growth is there. So I mean, even if you do, let's say a 20 multiple, just curious, that $300 billion company basically. But let's just do 15. I don't think they're gonna grow as fast. Let's say like AMD or an Nvidia maybe, but still a big company that has a lot of free cash flow. 15 multiple I think is fine. So anything below this, so anything below $58 today is a buy for me. Although I don't have any shares yet, but I am eyeing it up. Today's current price, 217.3. Did I do that right? I think I gotta change this number around. 33.80. It's up very close to this number. So at the support level that I really want to buy it at, it's at 44.50. That'll give us a market cap of about 180 billion if it gets there. I do think we could take a look at the chart really quick. I do think it might get there just based on the technicals, but I would be very, very bullish there. But I don't want to, be too greedy and miss out on, I think, a good opportunity. This company's got everything that I kind of want, The only thing I don't like, though, is they get top competition, and it's in the tech space. I think tech is quite overvalued. Although this company I don't think is, so it's interesting, like, a dynamic. They recently got a new CEO, and that worked for the company for many years. One of the problems in Intel in the past, the CEO, I don't know everything about it, obviously, but he didn't really know what he was doing too much. And this guy is ready to, or the new CEO is ready to, get this company going. But yeah, for investing purposes, I look for high margins. Anything above 20% is pretty high. I guess net income, but even operating, whatever. Buying back shares, increasing equity in the company. They're not very leveraged with debt. They are at a decent cash flow multiple. They do also have a dividend. I don't know. There's not too many. I try to keep my stuff really simplistic for what I would buy. But this fits all the criteria that I am looking at. So yeah, I'll probably be adding. I might just buy some today. Actually, the market literally just opened, so we'll see. Yeah, I'll probably end up buying it. But let's go to, where is it? Investments 3M. So I do want to see the free cap. This is not 3M, this is AMD. So go to quarterly 2020. So we need these two numbers, 1493. So do 1493 plus 1378. So that gives us 2.8 billion free cash flow. Why did that number change? It should not have changed yet. I mean, I can do all this later, but I kind of want to see. Let's see the revenue and stuff. Last 2 years. What's the net income? 1524 and 1624. That is the number. 1524 plus 1624. So that's how much net income they. So they already in the first Q2 quarters. Let me just make sure I do this so I don't forget. Q2. They already did produce a lot of net income. They're more than half of what they did last year. Did have a weak 2019 quarter though. Let's see. I guess I might as well get the revenue. 8950, 8950, 8851. 8950 plus 8951. I think that was it, right? 8851. I was gonna say. Let's do, yep. 17% margin so far. Operating income 2051. 2051, and it was a 27.3. I think it was, gives us a 23% margin. Operating margin. Let's fix these numbers. I don't like when they look like that. Boom. Total equity. Let's go to the balance sheet, just see if they updated really anything. Shares, ordinary shares that were 7, so I did 578, 63, 578. I mean, they didn't really buy back too many shares. If anything, they did dilute a little bit. Like 2 million shares to 2020, 2021. And then they bought back, so it's a little bit over the place. Took on like 100 million more debt. I don't really like their debt to equity. Oh, wait, I can do this now. I forgot. Open a mic. Oh, you can't see the calculator. Oh man. Because how do I do this? I don't know. I'll figure that off screen. I figured out I could just use a calculator on the whatever. I guess I can just type in calculator. But anyway, what was I looking at? What is their current payout ratio? Let's do the forward yield's 3.15. Okay, I mean it's still pretty good, but the payout ratio is currently 5.92 divided by 10.11. Wow, it's like really 59%. It's not super high, but it's not super low either. So their free cash flow kind of is low. They gotta do pretty good the next 2 quarters. Let's see the free cash flow for quarterly. 2 billion to, I mean, I need more data. I should probably start paying for a software or something, but I don't think you can make videos on that because it's like exclusive. I think it gets a little iffy with that, but so they're, I mean, just judging really quickly, it's still in line. This quarter and ending in June is in line with their June, and the 2 last quarters of the year they did more money in free cash flow. Let's see something too. Let's just say, what's this number times plus 4? This number plus 4 would give a 6.8, assuming they do 2 billion free cash flow the next 2 quarters, but I don't know. Relative to a 20 PE, which I don't think I would give the company because it's not, I don't think 3M's a growing company, it's already pretty well established, so a 20 PE in my opinion is a little too generous. I think 15 is too low though, so maybe like we'll do 17. to 18. I don't think it's really a $100 billion company, just based on the free cash flow. But even if we assume they do this, let's just do this. Let's just say they start doing like this number times, 18 or whatever, a year. Yeah, that'll give us like a $120 billion company, maybe. I think the growth's slow, but yeah, I'm just trying to see if I should cut back some shares and put it into, like, let's say Intel or something with more value. I don't think I should do that. I think I should just be a little bit more patient, but at the same time, it's like, I don't know, you just get in those moods where you're like, I feel like I gotta make something happen, but yeah, I guess in those times, you just gotta chill. Let's go over to the chart. I want to show you guys Intel. Where's my chart icon? Where are you? There it is. Okay, so here is my chart icon. Not chart icon, the charts. Here's Intel, the last 5 years. Let's do Intel monthly. So we got the .com over here, but the main thing I want to point out is look at this support area. Go back to 5 years at 44 something dollars. Like, super spicy. At the same time, they're buying back shares. They're increasing their dividend. They're doing quite well. Like, I don't really see what the problem is here, but that's why at 44.50, even like $45, I'm gonna start buying a lot. I do really want to add, just buy some, because I don't want to miss out and have it to buy it like up here if it does go. But then again, it could fall. You don't really know what could happen with the stock, but I know market share is being taken away from this company from AMD and Nvidia and so on, but the company's strong. Like, it's just a strong company, so I know what people say about, like, this company and the space that it's in, but I'm looking at the numbers and I'm going, alright, this company looks pretty valuable to me. Even if it's not growing at the rate that might be anticipated, or other companies in this sector, at some point I'm looking at that free cash flow going, okay, this is valuable. They're going to be using this money to buy back shares, or give shareholders dividends. I don't know, that's just where I'm seeing the value right now. AMD also had, the huge run up, and I get their, what's their market cap right now too? I think it's, let me look this up, I'm kind of curious. Intel, yeah, it's pretty high, but AMD, you guys can see this, but give me a second. AMD's basically half the market cap of Intel. But from the sake of like a revenue and income point of view, they have a lot more room to grow to catch up. Let's see their net income against, I forgot, about 2.5. Yeah, they gotta grow 10. So AMD's market cap is 2 times or half of that of Intel, but Intel is currently generating 10 times the amount of money as AMD. Is it 10 times? I just said AMD is doing 2.5 billion, and AMD is doing 20, yeah, basically 10 times. So I'm not saying AMD can't do that. I'm just saying, what would you pay for that price, though? And I think if I gotta compare these two companies, why would I buy the one that is earning a lot less that relative to the market cap, when I could be buying this one that has less or higher market cap, higher net, relative to the net income, the market cap is cheap. That's what I'm trying to say. But yeah, I mean, I get AMD might grow more, but I'm still looking at the numbers and the valuation point of view, and just saying, I don't know. Intel's looking spicy. Looking at 3M though, 3M had that big bad day the other day, a lot of big sell-off. Not really looking to buy though. I don't know. I think my portfolio already has. Let me actually. I'm curious. What is the percentage of this? Oh, that's not that much. That's only about 10%. I thought it was a lot more of the portfolio. I think Exxon's a little extended, not anymore. Exxon, now that it fell like 15-20%, it's not as big of the position as it was before, but still pretty big. But yeah, we successfully managed to get a whole year's worth of dividends. So I'm up to about what, like 10% now. I think it's 9.5% on this company, just based on dividends. So very nice little trade there, or nice cash right there. But yeah, I don't want to get too much into other companies though. Walgreens I still think is a pretty good value, but if I had to pick one, Walgreens or Intel, looking at Intel. But anyway, I'm gonna wrap this video up. Thanks for watching. Let me know what you think about Intel, AMD, Nvidia, TSM. Well, actually, didn't TSM fall a lot? It didn't fall a lot, but it definitely fell. Wow, that's a big run up. Looks like there's a lot of support around the 110 area. Alright, anyway, thanks for watching, everybody. Hope you enjoyed, and I will see